Hey traders, welcome to the tradingmentors.com. This is Chris. Hope you're having a wonderful weekend. This is a coaching video, particularly talking about fair value gaps and support and resistance lines, divergence, entry points, and in particular we're talking about gold, but it happens with any asset, of course. But gold is highly valuable. It moves. It can move 200 or 300 pips if you get it right. So I just want to cover this and get into a little bit more detail so you can get better entries and more profits, which is what we're here for at the end of the day. So let me just go into the daily chart here on the left first of all. And the most important part of this is the previous day's high. And what we can do here, we can grab the tool here on the left and we can go to horizontal ray here, and we can just draw a line at the previous day's high here. Let's do the previous day here, and we can do a previous day here. So before you go into the markets, you know from fact that these are really important areas of resistance and support. So once we have those, what you can do is, let me just show you, go to the tool up here on the screen. Go to this tool here, more, and then sync it. So it will sync in with the chart on the right, which is, what is that? A 15-minute chart. You can make it a 30-minute chart if you want to, doesn't matter. You can see this is synced now, so it actually gives you the, if I move this here, look, see how it moves on there, because you synced it with the chart, which is really good. And same here on the bottom here. It should be there. Where is it? Oh, I haven't synced that one. So we sync this one as well. So go to more and then sync, and then suddenly it appears. So these become very, very important areas of support and resistance. That needs to move up a little bit, doesn't it? So you can see that there, not quite right. So that's about there on the previous day. So now that's disappeared into the support area there on demand. So that's really, really important to understand that, so that you get a better understanding of where you're going to be starting from, where the resistance is and where the support is. Now, if you've got the Advanced Pro Charts and the Gold on Steroids software, you'll have the FVGs, the fair value gaps, automatically drawn on your chart. Look on the left. These green areas are buying opportunities. And if we have a look back here on the daily chart, see what happens during this time. Let's enlarge this for you so you get a better idea of what actually happens here. So as the price continues to go up, the price actually comes back down to touch this fair value gap here. And there's your buying opportunity. Come up, down, fair value gap, up, down, fair value gap, up, down, fair value gap, and so on and so forth. So the fair value gaps are really, really important. But what you want to do in order to get into the trade, you need to actually just dial down. Once you have this information, the previous low, the fair value gap, you know where the support lines are, very, very clear indeed. As we can see here from Friday's session, we can actually now dial down to the 4-hour chart. Now the 4-hour chart is here now, and we can actually see the FVGs appear like magic. And these are the trading opportunities as we go down and the price comes down into the green zone. Now for me, you don't want to be putting in pending orders. You can do, but you'd have to have a wide stop to do that. What I like to see is the price come through it. And you can see the actual previous day's low here, drawn from the previous day's chart on the 4-hour chart on the left, and the previous day's high. So we know that these areas are of interest. All right, that's the first thing. But what I want to see the price come through the FVG and come back out again. It's rather like a fish out of water, it has to come back in, or a bird diving into the sea to catch the fish. It has to come back up, and it only comes back up with a profit. So as we see the price move down, We are then looking for this area on the left. This is the 4 hour into the FVG, and look at the 30-minute on the right. Now we are going to dive deeper into the chart to give you the entry points, what we're actually looking for a trigger, our stop, and then targets. So this is really important video for some of you guys who want to be just trading price action. Price action is the most profitable way to trade. Now when we see a clear trend, then we swap over to our gold on steroids trend software, which gives us the entry point, the stops, the 3 targets. That's fine. But this is one way to actually make a lot of money using just price action, FVGs, support and resistance, and then we go on to divergence. So as we can see here, so once we've got this established, and it happens every day, by the way, you see this happening every day, prices come back into FVG, into FVG, into FVG, into FVG. Very common indeed. Once you've got the settings right, it's worth an absolute fortune. So make sure you've got the gold on steroids software. If you've got the advanced pro charts, then you know you're going to make a lot of money. So hopefully that's clear. If it's not, just drop me a question in Telegram and I'll answer it as and when I can. So that's the first thing. So how do we use this information? So we see the price coming into the FVG. How do we actually get into that? And how do we get the entry right? So this is the 30-minute chart. So personally, I would not be using the 30-minute chart. This is delayed, and you're going to miss out on the entry points which are already defined by definition, i.e. we know where the FVG is from the previous day's highs and lows. We can see it very clearly. So these are areas of interest to us. Now this does not mean to say there's not any opportunities to actually sell this, because there are, and I'll cover that in the next few minutes. We're not just looking for buys with price action, we're actually looking for sells as well if the conditions are correct. So I'll cover that as well. But for the moment, let me help you, guide you into actually getting into a position which is going to be hopefully very clear. So this is what we had on Friday, the 21st of February. So if you're watching this down the line a bit, on YouTube, then of course the same conditions apply, the same rules apply, it's just different pricing, of course. So once we get into this position here, this is already established. This here, the demand zone, is already established on any chart. You can go to the 30, go to the 15, it's already there. Okay, so you know that it's established, and you know that this is a really important area of 1920-ish is the place you want to be. So how do we get into this position? The first thing that I'm looking for, and you've probably heard this many times before, is an outside bar. Now an outside bar is represented by the price being outside the channel. My analogy is a fish out of water, because the fish out of water, jumping out of the water, can't last long. It will actually come back in. And that's the analogy I'm using here. So let's have a look at a few examples, get some tools out of the way here. I'm just going to highlight these for the people who haven't seen it before. So here, and here, and here. So you notice how the bars, candlesticks, are outside the channel. So this is not normal. The price has to come back in one form or another, one form or another, one form or another. It's just the way it is. It's just part of the gold on steroid system that is fantastic. So let's go into this in a bit more detail. But this is not the only rule, of course, but we need to see that there's some divergence in the market as well, which is handy. We're not seeing anything there because it wasn't live. So this is a negative divergence. This is positive divergence, negative divergence here and here. The lines are automatically drawn for you. Okay, it's really important. Now, if you have negative divergence inside the previous day's high on any chart, then of course this is highly likely to have a reaction. Now what will happen, and did happen, you'll see this yellow zone, which is the supply zone, automatically appear on your gold on steroids software. And this is, mine's in yellow, it could be any color that you want. You can actually see how the price reacts. It comes down and then it comes back up into this zone here. This is your sell zone here. Now you can wait for change of character here, or you can just simply get in on this area here. Note that there's no outside bar, but there's significant convergence at this point from the previous day's high. So that's a good selling opportunity. Now, you don't want to be short here. You can see why. There's a minor support area here from previous days. And we can see that the price is highly likely to come back up. So how do we use that information once we've got it? See this short position here, despite the market's actually bullish in terms of general momentum for gold, but we've got a double top. We've got an outside bar outside the channel, and then we've got a doji, which is highly, it's a reversal point. It's a typical pattern that you see. And the other thing to note, of course, is that the price come back in from this high here into a double top into the sell zone, the yellow zone, which is automatically drawn on your chart for you. So this is a very good opportunity to go short. Now these are not small numbers. If you want to get active in here, these are not small numbers. 190 pips there, 259 pips there, 189 pips there, 153 pips there. Outside bar. Makes sense? So the bird is flying, it's hunting its prey into the sea, it's going to grab a big fish, right? It can't stay underwater very long. This is exactly the analogy that we use. And so the bird has to come back up with the fish. And so we're seeing this happening here. So as the price is an outside bar, bullish candlestick, go green, and it moves back into the channel, and that's another, what is that? I don't know, 144 pips. So these are fantastic trading opportunities. But how do we use this information to actually get into the trade and get into, you can actually see this here, there's the previous day's low, this black line here, which synced with the daily chart. Okay, it also synced and converged with the FVG. If I do this here, you can see the FVG right in the middle of the FVG on the left. So the prices come into, the birds come into the water to catch its fish, and it has to come back out again. With the fish or without the fish, it doesn't matter. But it's the only way he can eat. So you have to acknowledge that the prices come down, outside bar, and then comes back out again and takes off again. So let's get into a little bit of detail in terms of entry points. And this is my take on it. Some of you will have different takes on it. But let me just draw a few lines so we can actually see how that looks in terms of reality, in terms of, I don't like that colour, let's make that blue. So I'm just going to show you the entry points first. So here, here, here. I think that's a non-starter, that one. There's one there. And there's one there, isn't there? All right. So let's just have a look at the 5-minute chart, which I would use as an entry. You can use the 15-minute if you want to. Okay, let's go with the 15, shall we? Let's get rid of that. Now the 15-minute will be delayed, of course. So I'm going to go to the 5-minute. All right. So the lines are synced with the 30-minute, which I've just showed you. So let's wind out a little bit. So there's a couple of things I'm looking for, and this line actually gives you a very good example. It's based upon volume. At the earliest opportunity, I'm actually looking for a green candle. This is not Heikin-Ashi, by the way. With price action, you don't want to use Heikin-Ashi. You can, but you will be delayed in the entry point. So if you want a good entry point, then of course you're better off using price action, normal candlesticks. So there's the line from the 30-minute chart, which confirms that it's hitting a support line. And here is the volume indicator on down the bottom here. See how this indicates, so above this black line, this is set at 50, and anything that's above 50 and green means there's more volume coming into the market. Okay, the previous candle won't be ready, but the next candle above the 50 is, and so is the next one, and so is this one, and so is this one, and this one, and this one, and this one, and so on. There's a nice big one there. So, but you want to get into the position as quickly as possible so you can maximize your profit. So let me just rewind that bit again. So here, if we go there, you can say yes, volume is coming back into the market. Also note here that the price is outside the channel. It has to come back in. It has no choice. It has to come back in. That's the way it works. So if you can grab that candle and trade that when it goes green outside the candle, you're getting into a really tight stop there, because your stop is probably going to be below this support here at 29.18. But because we don't know that the price is, it can do this and then bounce up, can't it? We don't know it's going to go straight up from there. It's highly likely to, but you want to make sure that your stop is sufficient enough to keep you in the game. Okay, and you can go 3 to 1, 2 to 1, whatever you like. 3 to 1 is nice. 174 pips. So let's have a look at that again. Let's line this up. So this candle here, immediately it came outside the channel, outside bar. It went green on the next candle, 15.25 GMT, and then the volume, where's the volume? The volume's up here. Okay, see how this volume here is up above the 50. So that's the entry point. That's how I would play it, because you have enough information to say and suggest that the price has come down to a really important area, previous day's low, into FVG. We have divergence in the market as well. Let's have a look at this one. Now this is better than this one. You can probably see why, because it's slapped back on hitting the previous day's low completely, and the FVG, and this demand zone, which is in turquoise here. So this is really, really important area, and you're likely to get a real big bounce on this one because of the significance of the previous day's low. Outside bar, highly significant, reversal likely, and look at the volume here. The volume on the gold on steroid software is highly significant, highly profitable, highly important. So there's your entry there, and there's hundreds of pips there. $150 pips, shall we call that? Let's look at another one. And again, what's one of these things, to get a demo account, grab a demo account, and then just practice, 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 because that's all it takes. You can't hone your skills without practicing. So here we go. We got the outside bar again. I know it gets boring, but it works. So here we can see the outside bar here on a highly significant area. We've spoken about that previously. And then the price has higher volume on the next candle. Now remember, we know these lows, we know the support areas. There's 210 pips there to that area. So that's another one. Did we do it? Oh, there's another one down here. Let's have a look at this one. I'll do one more. I'll do two more. So again, we have, let's go to the 30-minute chart. We've done that one. I think that's the one we've done. We've done that one. So it's this one here, isn't it? The last. Let's do the last one here, which is significant because of the fact that it's hitting the previous day's high into a yellow zone, coming back up into a yellow zone. So let's get rid of these so I know which one I'm talking about. Let's rewind. There we go. So we've got the previous day's high. We know that because we've done the analysis first thing before we started trading. And we've got the highly significant yellow zone, mine's yellow, and we can see that the price often hits this. It just comes straight back up to it. And then you're just waiting for the volume to come into the market. And as soon as the volume comes into the market, that's your selling opportunity. I would, in this case, I would have my stop. You can see the entry point, but I would have my stop at the previous day's high, 25 pips, and you would have your target at the low down here because it's already calculated the support line. 260 pips. So if you have any questions, please let me know. This is a fantastic system, and the gold on steroids is designed for price action. It's designed for continuation patterns. It's designed for continuation trends. It's designed for swing trading, and it's designed for price action, whatever you want to treat it. But it's highly significant and highly profitable. So again, any questions, let me know.